start with these Fisher comments, though, that we're waiting for, as we mentioned, in just about an hour's time from now. Fisher seems to, in his recent remarks, kind of, trying to really get out there that the Fed is ready to raise rates. So even after today's jobs report, do you think he will still be pounding that table for a rate hike?
I think he'll want to keep his options open. What today's report, which is comprehensively weak, you've mentioned it, weak job creation, weak revision, weak hourly wages, hours worked, participation rate back to 1977 levels. This is a comprehensively weak report. So what that does, I think it takes October off the table. But I don't think it takes December off the table. I think it's a 50-50 for December. And what Fisher is likely to remind us is that there are other elements of strength in the U.S. economy, and that monetary policy has to worry about also asset prices. So I think what you'll get is a message from him that says, we keep our options open, we're data dependent, but I don't think he will take off December at this point. He won't take it off the table.
Okay, Mohamed, but we had thought that the jobs market was sort of the one area of growth for the U.S. economy. So what are the other areas that are more positive and would bode for a rate hike?
So if you look at other indicators of the jobs market, they're not as negative as today's report. If you look at consumer spending, including what people have been spending on cars, it's not as negative. I'm not saying today's report isn't bad. It is bad. I'm just saying that it's not bad enough for the Fed to completely remove 2015 as a possibility of a rate hike.
Do you think, as we were talking about earlier with another economist, Michelle Girard, she believes that the Fed had missed its window. They should have hiked in September before this, new unveiling of more bearish economic numbers. Do you think the Fed made a mistake and missed their window?
So I think they did miss the window. I don't think it was September. I think it was early in the year.
Okay.
When you had both international and domestic factors aligned. And then a couple of things happened. The international factors started becoming major headwinds. Then you got financial market instability. That made September difficult. And now there's a question mark about the domestic elements. So yes, they did miss a window, and they missed an important window, but I would put it earlier than Michelle did. I would say it was earlier in the year.
We've had a lot of people on, Mohamed, including yourself, over the last several weeks, talking about the Fed and the impact on the markets. And one such person is Howard Marks from Oaktree, who had this to say about the Fed, and I want to play this for you, Mohamed.
Another reason they should just bite the bullet and start doing it is that when they don't do it, everybody takes that as a signal that they believe the market's too fragile to do it. And that's why I think things have been weak since it didn't happen.
Do you think the Fed thinks the markets are too fragile, Mohamed?
I think the Fed is worried that the markets have lost their anchors. And therefore, the Fed has to worry not only about the impact of its actions, but also its signaling. So look today. I mean, the Fed's going to be looking at the market and say, hey, wait a minute, the stock market came back pretty well. But then if it looks at the bond market, you still have U.S. Treasuries having moved a lot in yields downward, which tells you basically the markets are saying, you know what, yeah, we know the economy is weak, but the Fed will remain stimulative. And that's not where the Fed wants to be. The Fed wants to be completely polar opposite, where the economy is strong and they're able to slowly normalize policy. So the Fed is in a really difficult position right now, Betty.
And Mohamed, your forecast of a 50-50 chance in December for a rate hike is a little bit different from what the Fed futures, where they're trading at and kind of how they're gaming out when the Fed could raise. And I think, guys, let's show that bar chart of the probability of a Fed move. And that 50-50 scenario, Mohamed, is more likely now in March. So, there's a difference here between your opinion and what we're seeing traded right now. Why do you think in the markets there, in the futures markets, they push it out so much further?
So it's always hard to say why markets do certain things, and it's certainly hard to second-guess them. Let me tell you why I think December is 50-50. The critical issue for the Fed is not when it moves first. It is the journey. And the Fed has an important communication challenge. Between now and December, it has to take the market focus away from obsessing with the timing of the first hike to realizing that this will be the loosest tightening in the modern history of central banks.